Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, July 16th, 2024. So these bulls are absolutely relentless, especially the small caps. That has been an absolute monster. As you can see here, it was up almost 3.4% today. So we actually got long the IWM at the 210. We did the straddles. We did pretty well with it. We made a decent amount of money. I kind of wish I would have went out one more day because this was yesterday that they expired, and we went. This is just a massive move. So the IWM is kind of leading the way with the Dow, and what's happening is there's kind of a rotation going out of the big tech into small caps, and that's one of the reasons why the NIAD failed, and why I was explaining to somebody today that it used to be a fantastic indicator when the markets were normal. But what happened was once we started seeing the big tech, the seven stocks, Google, Nvidia, all them, Apple, kind of take over the market, where they accounted for, I think, almost 80% of the gains in 2024. But the thing is that no other stocks were participating. So we were getting that NIAD sell signal, and in the past it worked great because you didn't really have just seven stocks that were lifting the entire market. You had the entire market moving. So it was a great indicator a couple years ago, let's say, and now it's failed twice. It hasn't really trapped me because, as I've said a couple times, is it's not a trade indicator, meaning that you don't make a trade just because there's a divergence. You put it on your red flag list, and that's it. So the thing is that once we started seeing this rotation out of the big tech into small cap, the NIAD just blew right through and took out the sell signal. So it's something I'm just going to keep an eye on, but I'm not really going to kind of pay attention to it as much as I have, just because the market's skewed up with the seven stocks, and when they're participating, then the NIAD's going to go down. When they're not, the NIAD's going to go up. So anyway, IWM, there's a lot of people are trying to short this monster just because it's gone up so high. That trade will work, but I wouldn't be surprised to see them push IWM up to 226 and possibly even up to 228. And if we just kind of look back, I mean, it looks like a monster move, but if you kind of look back on this whole thing, it's not even at the all-time highs. The all-time highs are coming all the way at 244. So that's the reason why I'm saying, you don't really want to be shorting this, and especially when we're looking like this. So let's just say this is our wave one, and we came down, made a wave two. Now we're in the midst of a wave three of three, meaning this is 1, 2, and this is the wave three. So we could see IWM keep going up here, then give us a pullback of maybe 10 points or whatever. I mean, I depending on where it happens. If it went all the way up to the 230 or 234, I would anticipate a 10% a 10 point pullback and then back up again. But the thing is that the wave structure, you're just asking for trouble with this. So let's get back to the S&P now, and we actually had a decent little trade today. As you can see here, we were plus 4,200, and again, it was not one of the days where we could have done the credit spread because we would have got stopped out. So that's one of the things that we really need to pick up on. But this was the thing, is I started getting the buy signal from the software, which it's still getting installed and I'm still learning it, but it did trigger it right here. This is a high volume. So we took a straddle trade on it because there's a couple reasons why I did this. Now, if it was the buy signal, that's great. Now, the software is not going to work 100% of the time, but the thing is that we had this inverted head and shoulders pattern, and really, I said, either we're going to come up to the 56.65, or we're going to come down to the 56.20, or even somewhere in that area. So we bought the 56.55 calls, and we bought the 56.40 puts. And all we needed to do is move up 8 points. Obviously, what happened was we broke through this. If I just take this, it's already measured here. So basically the way this pattern works is you take the distance from here so that you can see it at the bottom and it's at the top. And once it breaks through the neckline, you just kind of put it up here. And if we take a look, that's almost exactly where the high was. And that's where I was telling everybody that I was going to start bailing out of the long position, just because we were going to be up on it. Like I said, we did very well with it. And it's from there you just kind of take it. So this was a trade for today. If it was something that we were hanging on to, then I would have just let it run. But it was a day trade, and we made our one trade. We did very well with it. And, again, this is the software giving us that buy signal right here, which isn't on this chart on it. I'm still going off of their stuff right now. But in any case, this was the buy signal. We did the straddle. And the reason why I did the straddle was as much as this is a bullish inverted head and shoulders pattern, I could have very easily sat there and said, here, I'm going to draw a head and shoulders pattern that would have been a lot more worse than the bull's inverted head and shoulders. So here you can see where we came up. Here's the left shoulder up. There's the head. This is the right shoulder. So we got in right around here, right? So either we were going to follow this pattern and we were coming down all the way down to the 5620, or we were going to follow the inverted head and shoulders and head up to the 5665, 5670. And that's why I took that trade. We just needed to, it was coiling up. We got, the buy signal was there, but I wanted to play it safe. We could have made a lot more if we just did the calls, but I like to stay market neutral on my trades. I don't like throwing everything in on one side and then seeing it reverse. And it just, this one, you're able to control your emotions. That's why I like to do the market neutral. So we were able to close it, and it was a good one. So we have some bearish divergences on the. This is only on the 5-minute chart, but on the 15-minute chart, you can see we're still kind of trading with it. This was the bearish wedge that was in place. Now it's not really there anymore. I mean, we could say, okay, that's that, and now move this up a little bit, but it's not really, it's more of a channel. I guess we do have it, but in any case, it's one of the things that this pattern was looking for a move down. We did get that move down. It didn't go to the actual target, but from there, we just regrouped. That's why I like doing the 0 days to expire, because we just turn around and we regroup and do the trades the next day, and I don't have to worry about what futures are doing or what's going on. So anyway, this was it. You can see we have some bearish divergences, but I still think we're heading up to the 5,700 by Friday. That would just make the most sense. And really, until the bears can get priced below this 5641 right now, that's the first task. Really, the more importantly is going to be this 5612. Until they break these support levels, it's the bulls are in control, and there's not, a lot of people are pricing in a Trump victory right now. We have the rotation out of the big techs into small caps, so the bulls have the momentum going right now. If you're going to pick a short position, you want to do the market neutral, buy a call and a put, because you're trying to figure out where a top is going to be. It's rough. It's not easy to do, especially when momentum is going as well as it is right now. So on the hourly chart, bearish divergences, nothing really has changed on this. If this pattern is going to play out, it's looking for a target to come down to the 5520 level. That would make sense because this is going to be moving up. So I would anticipate that where, we'd come somewhere into the 5,500. But until, like I said, until we see this 5,508 taken out, it's not even worth, it really, let's just say that we can even go here, just say the 5,608. Until we start seeing some of these levels taken out, the bulls are just going to continue to move it higher. And just remember, one of my models, it doesn't mean it has to play out like this, is looking for some type of blow off top this week. So let's see what plays out. Have a fantastic night, and I'll talk to you guys in the morning.